Welcome to Angel Impact, the official podcast of the Wisconsin River Business Angels. Episode 6, How We Evaluate Companies for Our Investors. Hi, my name is Aaron Marks, and I'm here with this episode of Angel Impact. And Angel Impact is the official podcast of the Wisconsin River Business Angels, otherwise known as the WRBA. And the WRBA is Central Wisconsin's only angel investment group. And I'm pleased to be joined by the leadership of the WRBA. I'm here with Jeff Ebel. Jeff is the president. How are you, Jeff?
I'm fine, thanks.
Great. And I'm here with Leon Ostrowski as well. Leon is the chair. How are you, Leon?
Fantastic. Thank you.
Good. And I think you'll really enjoy this conversation today because I know it's a topic that that both Jeff and Leon approach with great animation and enthusiasm, and you're going to really enjoy the synergy that they have when they discuss this. And it's about how the WRBA pipeline works to evaluate companies for their investors, because angel investing is all about investing in companies and guiding them in the process. And part of what Jeff and Leon do, at a very intensive level and very successfully, is to evaluate companies for their investors, and to make sure they're a good investment. So we're going to dive into that. So there's a couple major considerations that I know both of you focus on when you're evaluating these companies, and one of them is whether the technologies and the companies, kind of fit what you guys call the conservative culture of Central Wisconsin. And Jeff, I was wondering if you could explain that a little bit, because it's not like necessarily like a politically conservative culture. But could you explain what is meant by that?
Sure. And thanks for clarifying that, because it has nothing to do with politics.
Yeah.
It has to do with the way we look at money. When you look at the East and the West Coast and their approach to angel investing, it's more like Las Vegas odds, if you want. I mean, they know what the odds are, and they've held up for 20 plus years the percentages of companies that go belly up, the percentages of companies that hit grand slam home runs, and those averages, they hold pretty well. Now, Leon and I found out very early on when we started this angel group that the Midwest has different values than the two coasts. We do tend to be more fiscally conservative. Money, I think, is a lot harder to come by in the central part of the country. And as a result, they're a little more apprehensive about where they're going to put it. So when we look at opportunities for our investors, we have to keep that in mind. They do tend to like to invest in tangible products. They like manufactured things. We're a very strong manufacturing base here in Wisconsin and in the Midwest in general. So I think they tend to like to see tangible products that are being manufactured, that have real quantitative value, something you can put your hands on and touch. They do invest in ones and zeros in the digital technology, but not as often as they would say in some kind of a manufactured product. So when we bring things forward, we have to keep that in mind. We have to understand that they're not as interested in maybe the flash in the pan types of businesses, things that would come and go rather quickly. They like staying power, they like longevity, and those are the things that we tend to gravitate to. Again, we try to offer a broad range of different types of investments for our investors, but keeping that in mind really helps us to winnow down the prospects and be able to put the right ones forward for our investors.
Yeah, and I know it is a big emphasis for the WRBA to find products that really work in the real world in a way that people can see, feel, taste, touch, right? And it's not necessarily that you're opposed to something like the field of IT. It's just that you notice that's kind of not where the interest has been, from what I understand.
Or it needs to be integrated with the product.
Okay,
right.
So. Leon, I was wondering if you could tell us a little bit more about the due diligence process that you use to, kind of focus in and figure out what you're investing in, because I know that's an enormous part of the value that that you and Jeff bring to this. And I know
And,
it.
and
Yeah, go ahead.
that's true, Aaron. And we need to look at those opportunities in two levels. There's these new entrepreneurs that don't have any sales. They just have a great idea and a concept which could generate sales when they have a viable business. And then there are companies that have been through that stage, maybe a year or two, and have created sales for their product. And then those have the start of having some evidence to say, hey, what they perceived is now being reality. And now you get into another whole set of business objectives. So we look at each of those with a little different perspective, and we try to have projects in both categories that we can present to our investors. And the reason we want projects in both of those areas is because the early stage ones, and we've got a protocol where we can sort out the winners from the losers pretty early in the game. And if we can get in those early starters, we can usually get in at a much lower cost, and therefore our same dollars will buy more of the company. So as a result of that, those are the ones where you get a lot of your home runs on. If it's starting to generate sales, now that company is worth maybe 3 times what it was at the previous stage. So therefore your money isn't going to go as far, but it's also a little lower risk usually, but that's all right. Each of those meet a little different expectations of the investors, and we sort of think we try to provide a blend of both.
There were a couple of sort of like axes that came up, maybe I would say. And one is sort of the blend of scientific and gut level evaluations that you make, and then the other one is like Leon was saying, the quantitative versus the qualitative. And when you're dealing with startups, you often don't have much to quantify, and so you have to look at qualitative markers much more heavily. And I was wondering if you wanted to pick up on either of those topics and explore them a little bit.
If this company is a new starter and it doesn't really have a history of sales or revenue, we will look number one at the management team, who these individuals are that are coming together. And they don't have to have all the expertise. And if they recognize they don't have all the expertise to have a successful business, then they're on the right track. We may find ourselves interested in looking at them further. But if they said, no, I already know all the answers, then we're very skeptical, because our experience has been most of the business people do not know all the answers, especially those that are getting started in a new area, unless they've done this many times. And if they've done this many times, then we listen to them because there's a track record. So those are the things you can look at in the individual. What is their track record? Is this their first venture? Is this many more? And then we'll look at the individual's willingness to accept advice. And that's really important, because if they don't accept advice, they feel they have the answer, we're likely to say, so long, we really enjoyed the conversation, but it really isn't going to be something we're interested in, even though the product could be very, very high level of interest. But we know down the road, we're going to run into some roadblocks. Jeff, maybe you could have some additional dimensions to add.
Boy, I can't agree with you more that at the early stage, probably the most important thing that you can determine on an investment is the quality of the management team. And it starts with the founder. And if the founder really understands his strengths and weaknesses, he is going to surround himself with a support team that can fill in for all those gaps, all those unknowns. The saying, you don't know what you don't know. It's spot on when it comes to starting a business. There is just so much to know and so much to understand that it's highly unlikely that you're going to find one individual that has all the knowledge and all the skill set, expertise that's required. So again, that strong entrepreneur is going to realize those areas. A good entrepreneur, a good founder knows what he doesn't know.
And what's nice about that, Mark, is that pardon me, is that you end up with an individual now that we know what they have support around them. And then through our investors, we can add additional support to these dimensions. It might be financial support from the standpoint of financial statements. It might relate to other things, distribution, you name it. And we've made some tremendous impact on these young companies before we even invested in them. They says, we changed our whole strategy on how we're going to approach the market.
I was going to add too that
Sure.
doesn't diminish the need for the data, because there is a lot of data that's out there. And if you have a strong team they're going to know that, and they're going to know where to find the data, how to get it, and how to present it to the investors to make their strong case for their enterprise.
Yeah. Yeah, yeah, you guys have so much to say about it, and you speak with such passion about it. I want to stress one of the big themes, that we can't say enough about angel investing, which is that angel investors do not just invest their capital; they invest their experience and their expertise, and they guide companies. They sort of almost join the leadership team and the board, right? And to note one thing that I heard one of you say, sometimes you work with these companies before you even invest in them. So it's like you're joining their team already, and that's how committed you are and your investors are to seeing these companies succeed, even beyond the capital return. And it strikes me that the self-awareness of the entrepreneur is really that might be how I sum it up, right? You're looking for self-aware entrepreneurs who, like you said, who know what they don't know.
Mm-hmm.
Yeah, and then one other geeky thing, because I'm kind of geeky. Sorry, it's like
No,
angel investing is it's like the quantum physics in investing. You change the result by measuring it a little bit, right?
yeah.
Yeah,
I did want to just reflect on one of the things you said, is
yeah,
that when we work with this, we are not Shark Tank.
yeah,
Okay, we don't want people to come in and throw them in front of the sharks. That's not our intention. When we work
yeah,
with an entrepreneur or a company, a startup company, we want to make sure that if we're moving them forward, that they are very likely to succeed, not only in business but with our investors. So we'll work
yeah,
with them. We'll try and illuminate those areas, uh, the dark places that they don't know, those areas that are unknown to them. We try to at least illuminate that and give them some idea that, yeah, you might want to check this area out first. And then again, depending on how they respond is a good indicator on whether or not they are coachable, that they take advice, and that they're willing to listen and grow and learn, in order for us to continue to move them forward. So we don't throw them to the sharks. We don't put them in front of a situation where we know they're going to get shot down. That it doesn't do anybody any good. And that's why, again, we spend that time, and we don't say no.
hmm
We just say not yet.
yeah,
And that's where we take a lot of these companies, bring them along, and our investors may have said no to us at the beginning, but after a year or two, they've got a lot more legs under them, and we bring them back to the investors a second time. Sometimes we're too early for our investors. And likewise, maybe we don't have the experience on that opportunity, so we'll work with another group that does have that expertise. And then as it comes around for the next round of investment, guess what? They're back at our doorstep asking if we'd be interested. So
hmm
it works both ways. It
yeah.
really helps the company and helps us.
Yeah, and what strikes me in that is that I think business is so much about relationship, right? And so uh, you're saying you really have relationships with your investment companies, and some of these relationships have lasted for a long time. And even when it wasn't right to invest, you're saying this is a relationship we want to keep.
Yep, we have a high confidence in the leadership and their ability to recognize when they're not doing the right things and
Mhm.
make adjustments and changes. And there's two type of people. Some that say, I uh, I can make the change, and then there's others that'll say, well, I want to listen, and then I can make the change after I get further information.
Yeah.
So the openness to accept advice comes back into play.
hmm Yeah. Well, do either of you have any other thoughts or anything you feel like we missed?
Yeah, there's the other 95% of what we do that we'll probably talk about in our future impact statements, and that's great. That's what this is all about. We're trying to educate, so we
Yeah.
want to really educate the entrepreneurial uh, community here in central Wisconsin, and this is our opportunity to do that. And with that, we think there will be confidence of these investors to work with us, and we'll also have confidence of the entrepreneurs to want to work with us. So it's a win-win game for everybody. And the net result is we get higher returns when we do this for the investors and for the entrepreneurs.
Yeah.
Everybody wins.
Yep. No, I agree, and I think that's really the awesome thing about angel investing is it's a win on just more levels than I can even count. So I appreciate the conversation today, Jeff and Leon, and I think the listeners do too. I think that there was a lot of great information in there, a lot of great perspective about how angel investing works, and the way that it impacts entrepreneurs and investors and economies, on many levels. So my name is Aaron Marks, and this has been Angel Impact, which is the official podcast of the Wisconsin River Business Angels. I've been with Jeff and Leon, and they're the leadership of that angel investing group, which is the only one in Central Wisconsin. So I really enjoy this conversation, and look forward to the future ones as well. So we'll see you next time on Angel Impact. Thanks so much, everyone.
Yeah. Thanks, Aaron.
I know. Thanks.
Thanks for listening to Angel Impact, the official podcast of the Wisconsin River Business Angels. To learn more about the Wisconsin River Business Angels, visit the website at www.midwestwealthventures.com or find us on Facebook.